Hi there, welcome to Kneppy Invests. Time for the 24th update to the performance of Kneppy's portfolio. It's been 2 weeks since I did the last update, and during the last fortnight, the portfolio has performed exceptionally well. For those who are new to this video series, I follow a momentum and sentiment strategy in this particular portfolio. I have two portfolios, and I've only really been tracking the performance of this portfolio compared to the market because I just want to see if a momentum and sentiment strategy actually does work and can significantly beat the market. And so far, that theory is coming true. This will be either the last or second last video I'm doing in this series, simply because once the new financial year comes to July the 1st, I'm going to change things up a little bit. So instead of tracking the performance of only one of my portfolios, I'm going to be tracking both of my portfolios. So my other portfolio, I use a long-term buy and hold strategy. So companies I buy into that or put into that portfolio, I want to hold for as long as possible, 5-10 years. If I'm holding a company for 10 years, that means it's doing very well. What I'm going to do is I'm going to maintain the value of those two portfolios at $100,000 on July the 1st and not add any cash to either portfolio for as long as possible. That's why I can easily track the performance of both portfolios during the financial year, and hopefully I'll keep that series going for as long as possible, 5-10 years, or as long as I'm alive, who really knows. Now on to update 24, the performance of Kneppy's portfolio. The overall market's been fairly strong over the last month or so, and that has translated to Kneppy's portfolio's performance. Done very well in the last 2 weeks. In fact, it's up 5%, helped along by a couple of really good performances by a couple of companies in that. Before I get into the performance of this portfolio, the first thing I usually do is talk about the overall market and look at the XJO. So let's go have a look at that. Unfortunately, ComSec is down for the whole weekend. Usually they're only down for like 3 or 4 hours on a Saturday morning, but for some reason they're down for the whole weekend, which fortunately for me is not much of a hindrance because I can use TradingView and ShareSite for my needs in this video. So this chart here is straight from TradingView, and this is the XJO Daily chart going back to September 2020. Since November of last year, we have been trading in this upward sloping channel, and whenever we get close to the bottom of the channel or the top of the channel, we do see the momentum of the XJO actually move the other way until the last few weeks, and now we're above this trading channel. So potentially a little bit more bullishness in the market. This could mean a couple of things. It may mean we might see some weakness in the next few weeks, or it might mean we might be seeing a bit of a surge in the overall market, and that surge might continue for the next few weeks. In the short to medium term, I am fairly bullish in the overall market. So I do believe governments around the world do have the incentive to prop up the markets or prop up asset values as much as they can. But I do think eventually all this propping up of asset prices will come to bite us. I'm not sure when that's going to be. It could be a year to 5 years, but eventually we will feel some pain. It's good to feel pain economically because when we go into recessions, that's very healthy because bad businesses will be swept clean from the economy and only those good businesses will survive. And that's actually really healthy for the economy, and the governments around the world haven't allowed that to happen, and that does mean eventually it's going to come back to bite us. Oh, and I forgot, the overall market, or the XJO, was up 1.8% for the fortnight and finished the fortnight at 7,312.3. Is that an all-time high? It's very close to the all-time high for the XJO. Onto the disposals for the fortnight. One complete disposal, which was Gascoigne Resources, a very disappointing fortnight. A couple of really nasty announcements they released. And Aries Resources isn't a complete disposal. That was taking profits. Share price took off, and I decided to lock in some of those profits. Still maintaining a holding in that company. I originally bought in at 5.6 cents, and I decided to sell out not half my shares, a little bit less than half my shares at 22.5 cents. For acquisitions for the week, for differing reasons, Brickworks and Johns Lyng Group released profit or earnings upgrades. Brickworks share price went up 11% on that day, and it does look quite bullish, the chart. And Johns Lyng Group, their chart has been looked bullish for ever since they really listed on the ASX, and they released also a profit upgrade. Share price initially didn't respond much. In fact, the next day, the share price actually increased a little bit more. IWF and IAG, we've just seen a bit of a shift in sentiment in these companies. We have seen both these companies affected by negative sentiment over the past few years, but it really has shifted, particularly for IWF. Whenever I see the shift in sentiment, that's when you want to hop on board, because you don't know how long that positive sentiment can ride the share price up. It could be a few years, and if that positive sentiment lasts a few years, the share prices of both of these companies will be significantly higher than it is now. In this slide, what I'm doing is showing you the portfolio since I bought every single share. So this is the current holdings. Current value of the holdings is $105,000. So I do want to decrease that to $100,000. So I'm thinking about transferring a couple of these companies from this portfolio to my other portfolio, because I have no thoughts about selling out of any of these companies just yet, except maybe Next Science. That is a possible sell, simply because they released an announcement towards the end of trading on the Friday, the 11th of June, which wasn't nasty. Won't say nasty, but I won't say it was a deceptive downgrade, but it was a downgrade. So I didn't like that announcement, and particularly the timing. So that could be a sell come the new trading week. Otherwise, every single company I have in this portfolio is up, except for Aussie Broadband, which is one of the companies I am thinking about transferring to my other portfolio, because I really don't want to sell that company. I believe that is an awesome company, and they do have a lot of room for growth over the next 5 years. So don't be surprised if that company moves to my other portfolio. Otherwise, the best performing companies since I bought into them have been Aries Group, up 105%, TPC, up 96%, and Dust Group up 94%. Worst performing companies, I've already touched upon Aussie Broadband. It's virtually flat since I bought them, only down 1.1%. Email payments, I've been fortunate enough that I have traded that, and even though my original buying price was about $5 and the current share price is $3.77, based off my trading, I have lowered my original purchase price, or I've just averaged down in a way, and right now I'm up $3 with email payments. And OFX Group, I only bought that about 3 weeks ago, is up 0.4%. Overall, very happy with every single company in this portfolio, except maybe Next Science, which I might be selling next week. On to tracking Kneppy's portfolio during different or over different time frames. The first time frame is the last fortnight, and Kneppy's portfolio has performed exceedingly well, up 4.5% during that time frame. Very happy, particularly when you compare it to the market, which was only up about 1.8, so more than double the market. The best performing company during the week was definitely Aries Resources, up 32%, or $2,778. I did take profits at 22.5 cents. They did release a really good announcement towards the start of the week. They went into a trading halt, I think it was on the Wednesday, and they announced $50 million capital raising on the Friday. And the market seemed to love that capital raising because the share price went up. So I do think the market has, or is, positive about the long-term prospects of that company. Bravura up 17% for the fortnight. This is a company I bought into because there seemed to like there was a shift in sentiment, and that shift in sentiment has really turned positive. And Phoenix up 12%. This is a junior iron ore producer. We did see the share price of that company for about 3 or 4 weeks ago, but it has recovered as iron ore prices have sort of stabilized, have been going down. Worst performing companies, Next Science down 11%. That's definitely a potential sell in the new week, simply because of that announcement they released towards the end of trading. It was not timed very well at all. Clinoville down 4.4% for the fortnight, and Ambertech down 4%. Most companies in the black for the fortnight. Only 6 companies did lose value during the last fortnight. So overall, very happy with the performance of most of the companies in this portfolio, except maybe Next Science. This is the performance of Kneppy's portfolio versus a benchmark since inception, and looking at periods of 6, 3, and 1 month. So I really want to see how this strategy performs over different time periods, whether there's certain time periods where it underperforms or where it overperforms. And to be honest with you, it does perform better than the market during all these periods. So since inception, MSP, which is the Momentum Sentiment Portfolio, or Kneppy's portfolio, up 36.5%. The STW is up 22%. Over the past 6 months, Kneppy's portfolio up 28% compared to the market, up 12%. 3 months, Kneppy's portfolio is up 17% compared to the market, up 9.6%. And over the past month, Kneppy's portfolio is up 8%, or just shy of 8%, and the overall market is up 3.4%. And what this is telling me is this strategy is working under the current conditions. We have seen the overall market in a bull run. I would have thought potentially the performance of Kneppy's portfolio might not beat the market when you see the overall market rise quite rapidly, but we haven't seen that in the past month. In fact, it has more than doubled the market return. So at this point in time, this looks like a very valid strategy when the overall market is going up. Onto the acquisitions for the week, and the first company I did buy into, well, actually it wasn't the first one, it was actually one of the last ones, but the first one I'll talk about is Brickworks. I haven't really thought about this company at all until the 9th of June when they released a trading update, a very positive trading update that they were talking about record property earnings for financial year 21, and it was all about revaluation. I'm a little bit dicey about when they revalue their property. And they also were expecting building products EBIT higher in Australia and North America, with sales gaining momentum. They do have a 39.4% holding in Washington H. Soul Pattinson. That actually is a company I have held in the past. And they had this weird relationship, Brickworks and Washington H. Soul Pattinson. They both own each other. So Brickworks owns 39.4% of Soul Patts, and I forget what amount Soul Pat owns of Brickwork, but they have this share ownership of each other. And I believe that was done in the past, so there was no takeovers attempts of either companies. They were unable to give NPAT guidance, something to do with Washington H. Soul Patterson's performance. I'm not sure. Anyway, the market loved this update. Share price up 11% on the day they released the announcement. The next day, in fact, there were some profit takers coming in. You actually sometimes do see this when the share price rallies quite hard. And I decided to take a position when the share price had decreased about 3 or 4% on that day. So I took a position at 22.87, and fortunately for me, the share price has gone up from then and finished the week at $23.41. Another position I took because of an earnings upgrade was Johns Lyng Group. This is a company that provides building and restoration services. I haven't done much research on this company. The only thing I really know about Johns Lyng Group is the share price. It seems like ever since they listed on the ASX, the share price has just been going up and up and up, a perfect uptrend. And I just decided to take a position because they released this earnings upgrade. It was a pretty good earnings upgrade. So they've increased their expected revenue for the financial year from 524 million to 558 million, and EBITDA from 47.4 to 52.1. The market wasn't that excited on the day. In fact, the share price only increased 1.4%. I decided to take a position on the day they released the earnings upgrade, which is unusual for me. I tend to want to wait a few days before taking positions after these sort of announcements. Sometimes I do take a position on the day, and this is one example. So I took a long position at $4.26, and then the next day, it does look like the market paid attention to this announcement. Maybe they had time to digest it, and the share price did increase to $4.40. Hopefully, this long-term uptrend this company has been in will continue for the next few years. With the next two companies, IWF and IG, I decided to take positions in these two companies because of a shift in sentiment. You can definitely see that with IWF over the past month or so. The share price has moved into an uptrend. So even though there was a lot of negative sentiment previous to this, you did see the share price go down 22.7% in September when they made an announcement of the acquisition of MLC. And then again, towards the end of January, the share price went down 11% on a business update. It does seem like all that negative news is now free of the market, and the market is now expecting some good things to come out of this business, and that's why the share price is starting to really roar up. A really nice looking chart at this point in time with IWF, and that's the main reason I've taken a position. I've completely ignored all that negative news in the past year and just focusing on what's been happening or transpiring in the past month and a half. Just like IWF, one of the reasons I bought into IAG is there could be a shift in the sentiment over the past few weeks. And the other reason I decided to take a position in this company is there is a lot of bullishness out there in regards to insurance companies. I've heard this in quite a few podcasts where not only IAG, but we have seen QBE, even Suncorp being mentioned as potential buyers. And the reason why there's a lot of fund managers who think these are potential buyers is because we've seen a lot of other financial companies go on runs like the banks. We haven't really seen that yet with insurance companies. So I think the feeling out there among fund managers that now is the time for insurance companies' share price to go on a run. And we're starting to see that, particularly with QBE and even Suncorp. We haven't quite seen that with IGA. So that's one of the reasons I decided to buy IAG, simply because the share price hasn't quite got into the run, but it looks like it might be wanting to. So hopefully share price can get above $5.40 and stay above there, because that is a quite strong resistance level for this company. The one complete disposal for the fortnight was Gascoigne. Unfortunately, this was a company I bought into about 3 or 4 weeks ago. The chart was looking fairly bullish. The company was released some good financial news. Unfortunately, they released 2 reports in the past fortnight, the 31st of May, which was a mineral resource and ore reserve statement. Share price went down 13%. That was sort of the harbinger of what was to come. 4 days later, on the 4th of June, they released a financial year 21 and financial year 22 guidance update. Share price went down 19.4% on the back of that update. And the main reason I didn't like it, and I think the market didn't like it, was the exploding costs we're seeing coming into the business. So that was an automatic sell, sold out at 47 cents, and the share price just continued to tumble after that. They went into a trading halt on the 11th of June to finalize the terms of material corporate acquisition. At this point in time, Gascoigne share price does look fairly bearish, with the share price continuing to fall. Wouldn't be surprised to see a bit of a bounce, because the share price has fallen a fair bit in the last 2 weeks, but that could be a dead cat bounce. But it also depends on this material corporate acquisition. If it's a really positive one, maybe the share price can recover. Though Aries Resources is my best performing company since I bought into them, I decided to take some profits on the 8th of June. My original purchase was at 5.6 cents towards the end of August. We have seen the share price just rally from then. I actually did sell out towards the end of April completely, but I bought in about 6 days later because of some positive news from Helix. Helix have a Aries have a joint venture with Helix, and some positive news that did come out of Helix that hadn't really shown up with Aries Resources at that point in time. So I decided to take a position fortuitous, because we've seen some really good news flow through with Aries Resources since then. On the June the 8th, they did release exceptional copper assays from RC Drilling at Constellation. Share price rose 20% on that day. I decided to take profits at 22.5 cents. Then they went into a trading hold a few days later, and they've done this massive $50 million capital raising, and the market has really loved that, because the share price went up on the news of this capital raising. The second best performing company for the fortnight was Bravura Solutions. This was a company I almost took a position in just after the IPO, but I held back, and then I subsequently just watched the share price rise. Seemed like forever after that point in time. So I was kicking myself. So I've kept my eye closely on the share price of this company, because the share price has been in a long-term downtrend. We know it's in the downtrend just by looking at the moving averages. The long-term moving average, which is the black line, the 50-day moving averages, is well above the other 2 moving averages. And what we want to see is that to shift around, and that 50-day moving average to be on the bottom. And we saw that shift the start of May, when we saw the share price increase quite substantially in one trading day, went from $2.80 to $3.15. And that's what made me decide to take a position, because that was the shift in sentiment, the exact shift in sentiment was on that exact day. We saw the share price go above the moving averages. We saw sort of the two shorter-term moving averages cross above the long-term moving averages, and we've just seen the share price rally ever since then. This is the perfect example of a shift in sentiment for a company, and I think sometimes some people would say you need a reason for this shift in sentiment, some fundamental reason. And the fundamental reason I would give for Bravura is all based off their UK operations, which have been hindered by COVID-19. And since UK is, vaccinating the population fairly well, I think the market is expecting Bravura operations in UK to just blossom in the next few months or maybe next year or so. That is all I've got for this 24th update to the performance of Kneppy's portfolio. If you have any questions about any company I've covered today or any other company that maybe you have in your portfolio, leave a question or comment and I'll answer those questions or comments as soon as possible. I sometimes can be a bit tardy in answering anything you have to ask or say, so just please be patient. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.